2024 saw a flurry of infrastructure investment activity, with investors showing an increased appetite for the asset class. Over the last year, infrastructure assets continued to deliver solid returns while acting as a hedge against inflation and protecting against downside risks. Looking at the secondary markets as an example, infrastructure funds held their value better than any other PE strategy, trading at around an 8% discount compared to the 13% average for private markets. 2024 fundraising may have been difficult for infrastructure GPs, with the average fund taking over 30 months to raise. But the transaction market stayed reasonably strong, with volumes up about 15% year over year. So what's going on here? Deals are happening, but GPs are leaning more on co-investment capital from LPs. In fact, Hamilton Lane has seen co-investment deal flow rise 5 times over the past 5 years. Looking ahead, we remain focused on high-quality assets with stable cash flows and multiple ways to create value. In the near term, we're looking at opportunities in power, data telecom, environmental, and transportation sectors. Let's look at power first. Power demand is on the rise for the first time in a decade, and we're already seeing the effects. PJM's recent capacity auction saw prices shoot up 9 times from last year. That's a $200 increase per customer before a single electron is even generated. Other major U.S. power markets expect a 19% rise in wholesale prices over the next 3 years. We believe that this supply-demand shift creates attractive investment opportunities for power assets that can reliably supply the grid or serve customers directly behind the meter. Speaking of increases in demand for power, let's turn to data telecom. The seemingly insatiable demand for data centers is showing no signs of slowing down, fueled by continued growth in cloud computing and artificial intelligence. While generative AI is getting all the attention, the real driver continues to be the growth in data generated and migration to the cloud. Data center developers are facing major constraints, and the best opportunities will come from those with operational expertise who can secure large, power-rich land close to major urban areas. What about the environmental sector? We're also bullish on the water and waste sectors and finding some of our most exciting opportunities there. We're specifically focused on assets with monopolistic traits, like waste businesses that own or control the only landfills in their region, or water assets with reliable, long-term cash flows. Lastly, transportation. The transportation sector is bouncing back after COVID-19, and HL's deal flow is up over 40% year over year. While we're still cautious about EV charging platforms for personal vehicles, we're seeing more attractive opportunities in the commercial and fleet space with stronger contractual protections. Overall, we expect these trends to continue and believe private infrastructure is well positioned for long-term success.